Real Life Trading Report, Episode 6, Saturday, September 29th, 6, 2025, 6:15 p.m. Eastern Standard Time. I got a special treat for you. All right. Glad you got the I'm glad I got to share that. I thought that this would just load up as a regular video, but it went to shorts, and I need to add something to this playlist to keep the order going. So we have that. Now let's take a quick browse on the Analyze tab. Got Thinkorswim, Paper Trade, desktop uh, platform here. Let's look at, we're on the Monitor tab right now under the Activities and Positions. Let's go to the Analyze tab. So it's right over here, Monitor, Trade, Analyze. Now I'm under the Risk Profile. The Risk Profile, the Risk Graph. This is a really amazing tool, and I spent a significant amount of time um, having my screen shared with people from Schwab. What I personally have been enjoying doing is calling later on in the evening when the normal stock market's closed, and I have an easier time of getting the futures traders on the phone with me. And sometimes they really know a lot more stuff than I do. So one thing that I learned is instead of putting, let's take this off here. So I'm experimenting with day trading different option strategies. And so with the risk profile, you can go through and simulate different things. For example, let's say if I want to see how I'm looking at some charts and I think Tesla is going to hit a certain number. In this case, let's say 450 right here on the daily. So 450 is, oh, you know what? I'm on the wrong. I'm on half one stock and more than half one stock. There we go. Okay, so now if I want to see if Tesla can hit this 450 or maybe even look at this 445, that would be $5 before 450, a little bit sooner. And what do we have going on up here? It reached a high of 444 and 98 cents. And back here, how many days ago was this? Friday, Saturday, Sunday. No, excuse me. Friday, Thursday, Wednesday, Tuesday, Monday, which would make sense that this line is lined up right there with the beginning of the week. So last week on Monday, it reached a high of $444.98. Could it make it to 445? It was right there. Now tomorrow, if the futures market opens up and futures are looking strong, and I wake up in the morning on Monday, and then futures are still looking strong, maybe we could have, maybe it would be somewhat reasonable to think that possibly Tesla might get to 445. Right? It's not too far away from where it's at right now, $5, and you see the ATR right here is on average is moving 18 a little over $18 in a day. So yeah, it seems somewhat reasonable. But what sort of strategy could capitalize on that? So the risk profile under the Analyze tab, risk profile, you can go under here to simulated trades and put different types of strategies with different days to expiration in. And let's just go with like this, 20 days. And over here, what I learned from Thinkorswim, the Schwab people, is one gentleman was saying that when constructing multiple leg trades, he still likes to put them in one single leg at a time. So let me show you what I mean. Let's take a look at the butterfly. Okay, so now Thinkorswim is pre-organizing butterflies here for us. And I was saying 445, right? So it looks like this one, we got 445 in the center. Looks like this one would be having our middle strikes. We'll get to see those in a moment. Middle strikes be 445. Now let's take a look at the risk graph and see exactly what's going on. So we're buying an option out here. We're buying a put over here at 447 and 50 cents. We're buying another put over here at 442 and 50 cents, and we're selling two puts here at 445. So we have a net debit of, it looks like, what's the mid here? 445. Maybe we could get about, let's say 430 realistically, because we see the sell, the buy. This is a net debit type of strategy. So let's say we can get, seems reasonable, we might be able to get filled for 30. All right, so now let's look over here, risk profile. And what, there it is. Now it's looking more like the risk graph of a butterfly. So this is showing at expiration here with, look at this color, turquoise or whatever that is, teal. Look at that number when I put this right. I try to get it right at the 445, exactly at 445. It's pretty close. So looks like our max profit would be about $210 roughly if Tesla were to be right at 445 at expiration of this. Now that's great, but it's kind of unlikely to play out exactly like that. So we're looking to set up higher probability here. But regardless, so this is what I've been doing, is going and looking at another one and looking at not that teal number, look at the purple number. The purple number is reflecting today. So now down here, let's move this up to Monday, which should be the 29th. Let's double check that. Monday, yep, 29th. So if Tesla were to hit the 445 and I wanted to close it on Monday, open and close it on Monday, this isn't doing it for me, right? Just the butterfly, it's not doing it, because you see that purple line is negative 24, almost $25. So on Monday, it would appear that there's basically no way to make money off this trade. So I might have to move the different expiration. This probably has a lot to do with expiration. Nonetheless, okay, so this is what I mean. Now here on the risk graph, see, I can change the dynamics of the butterfly, but I can't look at each leg individually. So what the gentleman was telling me, so 447.50. Let's do it this way. We'll change this back to a single. So we're selling the 445 put. Where are you? 445 put. You are selling two of these. So change this to -2. Selling two of these. What's the mid? Okay, 50. Maybe we might be able to, let's just kind of go in the mid here. And then selling two. Now we're going to add buy one 447.50. Buy one 447.50. And what might we be able to get? And let's say maybe we can get it for, if luck is on our side, say 26. And now we're going to buy another at the 442.50. 442.50. Okay, and maybe we could get this for, let's say luck is on our side and we get a good deal on this one too for 23.15. Now let's go back to our risk graph. We can deselect this. All right, and this is basically the exact same trade. Make sure it is the exact same trade, right? Same days of expiration, same strike prices. Two of these, great. But now here is the beauty of taking a little extra time to put it together. Now we can look at each leg individually. So for example, let's start with where the most risk is. Two short puts. And then there's a lot of things you can do with it from there. But this is one of the biggest revelations that was revealed to me, is separating the different legs when constructing theoretical option trades in a risk profile. So that way we can look at, well, what if we closed short those short puts and we were just left with the two long puts. And hopefully this is very obvious, but the reason why this would be is that, as I was explaining, the probability of Tesla landing right here in this 445 in this time frame to get the max reward is not very high. And each day that goes by, things start changing. You notice that purple line starting to rise. So if we were attempting to time it better, and we weren't looking at closing it in one day, and we're setting up a trade, so maybe over back here or back here when it's pulling back to this 9 EMA, maybe looking at it, looking to put on a trade like this, because if we could time it, and now we opened it, if we opened it on the 29th, now it's the 12th. If Tesla trades through this, look at that. We're only making $13.35. Isn't that bogus? Not very exciting, right? We have a potential to make $200 and we're only making 13. But that's the beauty of the risk profile. Is look, and then let's say if we were to put this trade on, and then in hindsight things aren't working out the way that we thought. Let's say that we thought it was going to be at 445 on the 15th, Then we're still only looking at a $16 profit. So basically, this this really wouldn't be a good trade, and that's one reason why I've been doing a lot of these is because there's a lot of different days to expiration to test things. But as it's split up, let's say if Tesla started moving up, if Tesla was moving up, then what's going to happen to these two short puts? Well, again, we're looking at the colors coordinating with these lines here on the screen. If Tesla moved up to 445, let me reset this to Monday. On Monday, if Tesla moved up to 445, we're looking at around a $600 profit, right around 600 bucks on the puts alone because it's moving up, the puts are moving value. So you could put together a butterfly or any type of strategy and just look through these different parameters and see in the time frame that you're thinking with the stock being at a certain price, what are the different choices that you would have if things are not moving the way you want, if they are, and just not only that, not only for adjustment, but just overall getting a better idea of when you're putting a multi-leg trade on, you have multiple things working together. So what are those different components? What are they doing? How does this outcome of only, only whatever, only $10 appear here when there's more of a potential of 600 with how does it go from 600? Because these are losing value. But that's the thing you can learn. You can learn all this different stuff. So that is a huge change in thinking about strategies. And as I said on this video where I was bicycling, this being a full-time trader is there's so much more complicated. Difficult, I'm gonna reword difficult to complicated, complex. Because not only are you dealing with the intricacies or insert proper word there, my vocab isn't the greatest. Not only are you dealing with the different complexities and the nuances of trading, but then also you have to take into account how is your what are you going to do for taxes? How are you going to be taxed? And how do you prepare for that? How do you plan for that? And what are the different things you can do about that? And insurance and medical and these different things that are way outside of the trading lifestyle. And some of these I don't watch TikTok and I don't use Instagram. I have YouTube though, and a lot of commercials I've seen over years, they'll somehow say like, "Oh, like I'm 3 weeks ago, I was working at a 9 to 5, and da da da. Now I'm traveling the world. 6 months later, I'm I'm a I'm a six-figure trader, and I'm traveling the world." And sometimes I just don't believe that to be true. And they don't ever bring up anything on the insurance part. They don't bring up anything on taxes and all this stuff like. And the other thing that they don't bring up that I mean, personally, right now I have one computer with a second monitor attached to it. Then I have a second computer because I need uh, more monitors. And personally, I like to paper trade. I like to practice stuff. I like to test stuff. So with Thinkorswim, you basically have to on one computer you have to have the live trading or the paper money trading going. So you'd have to close down one and reopen the other one. And when the market is active, or even when it's not, if I'm looking at different positions and thinking about them, I found it's more helpful to have a second computer for the paper trading. However, now that was working very well when I was trading on the side, working my way to trading for a living. But then once I've been here in the Eastern Standard Time Zone and in pursuing this full time, then two monitors for the live trading wasn't enough. So now I'm using my second computer is I have the live trading pulled up as well. And and then what I'm experiencing is that I probably need two, I would like two, maybe three more monitors. And if I'm attempting to be a full-time trader, and at the moment I can do that because of my monthly expenses, I've done a good job and continue to do a good job at keeping those low. I don't need to be a six-figure trader to trade for a living. I need to be resourceful. I need to be profitable, but I don't need huge. I don't need to be a six-figure trader every year. I don't need to be making like $100,000 a year in order to fund my lifestyle this way. And and if I'm attempting to, which just for the completely to be clear for the record, even though I can start this and begin this without being a six-figure trader, it's not where I'm looking to stay. Like the goal is much, much, much bigger. However, to get that started, step one was eliminating working for other people. So my mind could be 100% focused on this. So now, after about a solid month of almost, maybe as far as of fully trading, there was my first 2 weeks. I didn't have good internet access, so it was so maybe we're looking at 3 weeks, 3 weeks of solid trading, going on to 4 weeks. I'm wanting more monitors. So how are these people traveling all over the world earning $100,000 a year by trading? I'll tell you one thing that might be true. One thing is that they could be BSing. It could not be true. It could be BS. It could be marketing hype. The other thing that that could be true is that they have such a large brokerage account that they really don't need to be that skilled or that profitable or that dynamic. Maybe they're just basically kind of skillfully driving down the highway. Whereas in my mind, I'm at a point of this that I kind of need to be more like driving NASCAR because if I had X amount of dollars, then yeah, it would be super easy. I mean, if I had $1 million to trade on, it's a lot easier. So maybe some of these people just have super super big accounts, but for most people that somehow either weren't gifted money somehow. Now, whether that's you got a sugar daddy, you got a sugar mama, you robbed a bank, somehow you like you okay, I guess robbing a bank isn't really gifted, but somehow you were sort of given money. You were born into money, or you had a good job, you saved money, you got money that way, and you've got like $1 million trading account or something, or even half a million, you'd probably still be doing really good. But unless it's something like that, if the average person is starting with like kind of like where I started, with where at one time it was a big deal that I just had $5,000 in my account. And then, when I crossed the $10,000 mark, I was like, holy moly, this is working. And and so for people like that, if you have like let's say um you have around $100,000 or less, then I think that you have to be able to wield your brokerage account more like a NASCAR. Especially, for me, I'm single and I haven't had any children, so I can keep my monthly bills pretty low. But if you have kids, like and you're around like $100,000 account or lower, you probably have to be pretty darn skilled, and you might really benefit from having more monitors. So how are these internet personalities, swinging such big stuff while they're globetrotting the world and barely have like different monitors? I'm not saying it can't be done, but what I am saying is firsthand experience. What I'm learning for myself is I want more monitors, and and I just traveled from Hawaii to the Eastern Standard Time Zone with all these different computers. Now it wasn't really easy, so I kind of don't believe that BS. But nonetheless, we're at about 25 minutes. Okay, I hope you guys have a fantastic time, whatever time it is you're watching this. Aloha.